When a government can no longer protect you, every cent you have earned in your life can become worthless in an instant. We have seen it happen in places like Russia and Venezuela, where currencies were reduced to scrap paper while people watched. But the next domino to fall is Japan, the fourth largest economy on Earth, and this time, no one escapes. To understand the sheer scale of what is coming, we have to look back at the 1997 Asian financial crisis. That event provides the exact historical blueprint for what Japan is forced to do today. These currency collapses are systemic contagion events that immediately rewrite the global rankings of who holds wealth and who loses it. Back in the 1990s, Japan was Southeast Asia's largest creditor. They pushed interest rates to nearly zero, effectively giving money away. International capitalists borrowed that cheap yen and flooded the region with it, inflating a massive real estate and infrastructure bubble. But when Japan's own economies started to falter, they couldn't maintain the facade. To save their own skin, they frantically withdrew that capital, pulling their money out of Southeast Asia almost overnight. The local impact was devastating, triggering a fire sale of Asian assets. Major corporations and infrastructure were bought up by American capitalists at rock-bottom prices. This chart compares the largest foreign holders of US debt. Fast forward to today, and Japan is preparing to execute that exact same playbook. Only this time, they are preparing to dump their biggest asset to buy back yen, the $1.24 trillion held in United States Treasury bonds. When the world's largest creditor pulls the plug on its biggest international investment, the financial center of the world is forced to absorb the shock. For 30 years, Japan kept their interest rates at zero. Investors capitalized on this by borrowing that free yen to buy high-yield American real estate and stocks. This seesaw graphic illustrates the mathematical trap those investors are in. If you borrowed 1,000,000 yen at 0% interest, you were fine as long as the yen stayed weak. But if the yen appreciates in value, you suddenly owe vastly more on that same loan, acting as an instant 20% interest rate penalty. Faced with those suddenly massive debt obligations, investors are forced to sell their American assets at a loss to cover the currency gap. By all normal logic, the US market should be crashing under this massive selling pressure right now. The fact that it isn't tells us that a hidden mechanism is actively absorbing the blow. To see how that mechanism works, look at this chart of US Treasury bond prices starting in 2020. The Federal Reserve lowered rates to zero, inducing Japan to load up on US Treasuries right at the absolute price ceiling. Then, in 2022, the Fed aggressively hiked those same rates. Because bond prices fall when interest rates rise, the value of the bonds Japan had just purchased crashed, trapping them in losing positions. At the same time, geopolitical tensions drove up oil prices. Because Japan relies on energy imports, paying for oil drained their usable dollar cash reserves. Completely out of cash, Japan is now backed into a corner. They are forced to sell their deeply depreciated US bonds at massive losses just to keep their economy breathing. This chart shows exactly how the Federal Reserve handles the sell-off, deploying a specific mechanism called the FEMA repo facility. The Fed essentially prints digital dollars to buy back those bonds from Japan for pennies on the dollar. And because this printed money stays locked within the central banking system rather than entering the consumer economy, it doesn't immediately spike your domestic grocery prices. The United States is using zero-cost printed paper to buy back real debt that Japan bought with hard-earned money. They are ruthlessly exploiting Japan's desperation to legally erase trillions of their own national debt for free. Japan is now caught in a vicious cycle. To keep their economy going, they have to print more yen, but the more fiat currency they print, the more the yen depreciates, accelerating a currency death spiral. When a government faces this kind of internal economic ruin, they often turn to external distractions. We are seeing this right now as Japan rapidly rebuilds its military posturing. Meanwhile, the ultimate winners of this crisis are already taking their positions. American institutional investors are waiting on the sidelines, ready to buy up Japan's remaining overseas corporate assets at heavy discounts. This crisis functions as an engineered, deliberate transfer of global wealth from foreign creditors back to US institutions. When massive institutions play these zero-sum games, the uninformed individual investor is the one whose wealth is quietly absorbed. That is exactly why we've partnered with the Stewardship Finance Academy to bring you their free stock investment masterclass. The Academy's core methodology is based on teaching you how to track the money. They show you how to identify the hidden signals that massive institutions leave behind in the market charts. Instead of guessing, the masterclass focuses on logical, risk-controlled systems. It gives you the tools to protect your own portfolio without waiting for a government bailout that will never come. You can secure your spot right now by clicking the link in the video description below to join the free masterclass. Global wealth is being redistributed right now. Learn to follow the charts so you are